What I'm trying to understand, and this is the question, the stock has moved materially since the election. And as you know, I think this guy's a genius, Elon Musk, and I think Tesla's done wonderful things. But I'm trying to just understand the price action. I could see somebody make an argument that tariffs that'll prevent other EV makers from China to come in should be helpful. I could see an argument that if the IRA goes away and certain subsidies go away to a Ford and a GM, given where Tesla is in the marketplace, that should be a benefit. I could see, though I'll be very straight with you, I don't like the idea of him having influence over NHTSA per se, because I think that it's very difficult to have somebody who's in a business influencing how the regulation of that business works. But maybe NHTSA opens things up, and therefore he has a greater opportunity to move autopilot and everything ahead faster. The question is, those things and maybe others, does that account for a 30% move in your mind? 30+% move.
Yes, well, it had been very depressed before that. As you know, we put our research out there. We have our team, Tasha Keeney, Sam Corris, and our price target is $2,600 in 5 years. That research is out there. You can find it. You can look at the model, change anything you want. So autonomous is 90% of that valuation. And we think the probability of autonomous has gone up dramatically. I mean, Waymo's already doing it, and they've broken through a lot of barriers, actually, for Tesla in terms of introducing the concept. Now, Tesla, with 7 million robots on the road already, learning the roads around the United States and the rest of the world. If we have national legislation, we'll be in a very good place.
Cathie, where do you land right now on Bitcoin? You've talked about $500,000 being the price point. I don't know if you changed the time horizon for that, given what's happened. Maybe it's been slower. Maybe now it's speeding up again. What do you think? And what do you think actually drives the price action?
Right. So we have a 2030 target. In our base case, it's around $650,000. In our bull case, it's between $1 and $1.5 million. Now, remember, we were the first public asset manager to gain exposure to Bitcoin in 2015 at $250. And we still, at 90,000, I think we have a long way to go. Why? Well, first of all, we're getting regulatory relief here, and I think that's one of the most important things coming out of this administration. We will get regulatory relief on all kinds of innovation, including healthcare. So the other thing is we're looking at Bitcoin now being viewed as a new asset class. It's not just a global monetary system. It's a new asset class. And what that means is institutions and asset allocators generally are saying, wait a minute, this asset is behaving differently from all of our other assets. We need to include. So I think that's the next big move. And if you look at years where the Bitcoin has halved and the inflation rate has gone down to 0.9, it's usually had a nice big move. So that's
Cathie, before we go, I got to ask you one tough question, and that is back in October, Puck wrote an article that said, why is anyone listening to Cathie Wood? And the author made the point at the time that the funds, the ETF fund, had lost $14.3 billion of shareholder value, which is an enormous amount of money. I don't think it's the same today. It's better than that. But why should people listen to you? By the way, the author gave us a hard time for even doing interviews with you.
So it's so interesting that we cannot fire our clients. And I would say we're at the flip side today of where we were in the late 2021 period. We were saying back then, hold some powder dry. That didn't happen. Flows just gushed in. Today, we're in the opposite situation. We've been great on Tesla, Bitcoin, NVIDIA at 40 cents was our first purchase, 40 cents. We're pounding the table on that. And now we want to go after healthcare, CRISPR gene editing. If you look at J.D. Vance, Elon Musk, they're all talking about this new wave of cures ahead. So stay tuned.
But how should we think about the volatility of your fund and some of these big bets and the way you're making them? I ask because, as I mentioned, There was a period of time, obviously 2020, that ETF blew up your ETF blew up in the best way possible, right? It was up 150% or something. But then, of course, if you look at a longer term chart, it's a lot more complicated. And so for those folks who watch us and I'll ask you questions and they're listening to your answers intently, what are they supposed to think?
Two things. We have a volatile fund. We should not be a huge slice of any portfolio. We are more of a satellite strategy now, although we think this is the way the world is going. Second, if you take out that boom bust in around COVID, which caused all kinds of interesting behaviors, you will look at, for the flagship, you'll see a fund that has based for 6 years. The technologies around which we have centered our research are so much more advanced. And so we think we're a very good complement to the broad-based benchmarks out there because we don't look anything like them. And truth will win out. The biggest depressant on the fund recently has been in the multi-omics, healthcare, life sciences space. We think that's going to change, and it's going to change quickly when it does because the rubber band is stretching. We're now seeing companies like CRISPR Therapeutics, Intellia, on the road to curing diseases, which is a very different model from traditional pharma.
Cathie Wood, we very much appreciate talking to you, and I appreciate you taking those questions as well. So thank you.
Of course. Thank you very much, Andrew.